Tesla is Cathie Wood's biggest bet, but it's not the only one that's paying off. Her main fund, the ARK Innovation ETF, is outperforming the market in a big way, and one new stock in particular is doing the heavy lifting. The ETF focuses on finding and backing the most disruptive names on Wall Street, and it has skyrocketed nearly 50% in the second quarter. That's well above the S&P 500's 8% gain. The knockout performer, Circle Internet. This stablecoin play made its public debut in early June and soared more than 600% from its initial IPO price of $31 by June 24th, making it one of ARK's biggest winners. ARK bought nearly 4.5 million shares on Circle's June 5th IPO, a $373 million bet. And Circle is one of ARK's top holdings, and Wood sold off 400,000 shares on June 23rd. That's worth an estimated $110 million. But Tesla is still the ETF's top holding, and it's up more than 24% in the second quarter, getting a boost from that robotaxi rollout that took place in late June in Austin, Texas. And Wood has been one of the most vocal bulls when it comes to Tesla's self-driving future. Now here she is on Bloomberg TV.
We think that robo-taxis will account for 90% of the value of the company in 5 years.
The ARK Innovation ETF is also benefiting from strong performances by high-growth stocks like Roblox, Tempus AI, Palantir, and Robinhood. Now overall, ARK is up 24% from the beginning of this year to the end of June, outpacing the S&P 500's gain of nearly 4% during the same time frame. The Cathie Wood strategy of betting on long-term disruptors made it a pandemic darling, surging 380% in 2020, but it gave up most of those gains by 2022 as speculative growth stocks fell out of favor. Now, ARK Invest says they focus on stocks with visionary leaders and technologies that will deliver exponential growth. So what else do those stocks have in common, and will the gains last? For more on all of this, let's go to IBD's Matt Krantz. Many of ARK's top stocks, Palantir, Tempus AI, Circle, play into emerging tech narratives. Do you see a common thread or theme in Cathie Wood's recent bets?
Yeah, so to keep it kind of simple, she's looking for home runs. So you don't hire Cathie Wood for just basic, to buy GE or something. She's looking for massive gains. And that's what I think that's a common theme. And she's getting some of them this year. Some of these, I'm looking at these returns are unbelievable. Like even Tesla is up 75%. That's her largest holding at 10% of the portfolio. So she's looking for big, big winners, and that's the common theme with her.
What, if anything, is different about her strategy this time around?
Yeah, so she gets criticized a lot for not having risk management, but that's not really her job. Her job, you're not hiring Cathie Wood to buy like bonds or something. You want her to go for the gusto. So it's really up to you, the investor, to counterbalance the ARK positions with other safer bets in your portfolio. So that's what she's there for. She's looking for huge gains, and she's getting them this year. If you exclude a couple of gold ETFs, her ARK Innovation is the #1 actively traded ETF this year in the diversified category.
What risks do you see in ARK's current portfolio? Do you see any positions that could maybe turn into losers pretty quickly?
Yeah, well, that's the thing. She gets a lot of winners, but she gets a lot of losers too. I'll see if I can look up some of these here while we're talking. So, for example, she's got something called Beam Therapeutics. Its return is down 31%. She's got 10x Genomics that's down 41%. So she's actually got a large number of losers in the portfolio. That's why she's all about the home runs. She can strike out 4 times, but if she gets a Tesla or gets a Circle Internet, it doesn't matter. She makes up for it in plus.
And some critics call her vision too speculative. Has this recent run helped validate her vision at all, or is it too early to tell?
I think it does validate her position. She's very clear on that she's making long-term bets on emerging technology, and she's willing to put up with a couple bad quarters, a couple bad years to get there. And that's the positive side. And you have to know when to get in and out at the right times with her funds. With that said, Morningstar did call her one of the biggest wealth destroyers in ETF history because her long-term track record does tend to be so in fits and starts that if you hold on too long, you can actually end up behind where you would be with the S&P 500.
And this ETF has been super unstable. I mean, we saw a big fall from grace right before that recent rebound. Now, does that make it better for active investors looking to catch waves of momentum rather than a long-term buy and hold play?
That's a great point. And I think that's what people do with her fund. They see an opportunity, they see the market shifting into a more speculative stance. So they go into her funds and it pays off really well. And then when they think things start getting defensive and people start buying value stocks, they kind of get out. So you have to, if you buy her funds, it's not a buy and forget. It's not a replacement for the S&P 500 where you just buy and forget about it. You have to buy it and get in and get out at the right times and counterbalance it with the rest of your portfolio.
And how would you describe Cathie Wood's overall trading style? Is she driven more by long-term conviction than short-term performance?
I think there's a lot of things that are interesting about her approach. But one thing is she makes big bets. Like she does her research and she goes big. Her position in Tesla's, like we talked about, is 10%. That's a large stake in just one company. Coinbase is 9, Roku's 7, Roblox is 7. So just those four stocks account for a large portion of the portfolio. And she's willing to kind of hold on for a while until things work out in her way. But with that said, she's also willing to sit on losses, which is very different than what IBD advocates. She'll ride stocks down 20, 30, 40, 50% and just hang in there, where we advocate cutting losses shorter. So that's something that's important to keep in mind.
And what will you be watching for in the remainder of 2025 to gauge whether or not ARK can really keep up this momentum?
So it's really about the top holdings. So Tesla is a huge factor. If Tesla goes sour, that's usually really bad for ARK. And Coinbase has turned into a really big play for her too.
Cathie Wood has made her move, but now the question is, will Wall Street follow? For Investors Business Daily, I'm Claire O'Connor.